The South African Reserve Bank has decided to keep the repo rate unchanged at 8.25%, the prime lending rate, which is the rate at which banks lend money, at 11.75%. However, Governor Lesetja Kganyago says that despite inflation being lower, there are risks to the outlook. He adds that the central bank will not hesitate to raise rates again if it seems inflation is getting out of control.
Unchanged interest rates will be somewhat comforting to indebted consumers as their debt repayments will not increase. Those with savings will also be getting the same interest amount on their savings. The Reserve Bank says high oil prices and the weak rand exchange rate pose the main risk to inflation going forward. Other risks emanate from the expected drier weather conditions that would likely affect agriculture production, as well as the electricity crisis, which continues to increase input costs for business. The central bank expects inflation to average 5.9% this year and only to reach the midpoint of the target range in 2025. Governor Lesetja Kganyago says the job of tackling inflation is not yet done.
As we had seen, the July reading was 4.7% and the August reading was 4.8%. And we expect that the September and October readings might be higher. And we have got to take this as it goes.
It's expected that interest rates will stay at elevated levels for longer as inflation remains a challenge. Economists say it's been a tough time for indebted consumers as they contend with the high inflation and the high interest rate environment amid the weak economy.
Although we haven't seen an increase today, I think the consumer is still facing, a considerable amount of pressure due to the high cost of living. The governor spoke a little bit about real wage growth, which has been declining. And of course, this weighs on the consumer's purchasing power. And I think from a survey point of view, when we survey consumer confidence, we can see that sentiment generally remains quite weak. Yes, we did see a little bit of an improvement in the last survey round. But the point really for us is that that index still remains in negative territory. And it's quite clear from the sub-indices within the survey that consumers are in no position to be purchasing big-ticket items.
The high cost of living has seen consumers battling to keep up with their debt repayments. The Reserve Bank says banks have recorded an overall increase of 28% in non-performing loans by the end of July compared to the same time last year. But it says this does not pose a risk to financial stability.
For banks that have got mixed lending, where they lend to corporates and households, you might see that the number is lower, closer to, say, 5% in terms of where the NPLs sit. So for banks that do more unsecured lending, you'll see that the number is a lot higher. And this is what we do in terms of the working with the banks. From a financial stability point of view, on a quarterly basis, we track how big is the growth in non-performing loans and whether that has implications for financial stability. But we have seen self-correction on the side of the banks because this is what they have to do in terms of being risk-based in their lending. Hence, one would have seen a slowdown in credit extension as well.
The Reserve Bank has revised its economic growth forecast upwards for this year to 0.7%. That's up from an expected 0.4% growth earlier. It says structural constraints will continue to hinder economic activity and increase input costs. The central bank says an improvement in logistics and a sustained reduction in load shedding would significantly increase growth. Gloria Safakomosi, SABC News, Johannesburg.
Okay. Let me respond to the question on the...
And to discuss this a bit more further, we're now joined by the CEO of 360 Global Solutions Group, Khandani Msibi, and he joins us via our Zoom link. Khandani, thank you so much for joining us this evening here in SABC News. Of course, we saw the announcement there by the Reserve Bank Governor. As expected, many people had predicted that he would indeed leave the repo rate unchanged. Your reaction?
Yes, I think it's a timid position that many economists have taken because they tend to look at inflation from a textbook point of view. and also forget that there's two evils. There's inflation, there's unemployment, right? And if you talk inflation only and you don't talk unemployment, there's other risks in the economy that are coming through. Because when you have youth unemployment at 60% and increasing, right? It kind of means that you are having significant risks that are actually growing in the country and therefore in the economy. And secondly, the celebration of inflation remaining within the range is kind of problematic for some of us, in the sense that the inflation, I mean, if you look at, if you take a basket of goods, in particular the food-related items for the poor, where cooking oil has gone up by over 30% in the past. If it goes up by 30% yesterday and by 4% today, it doesn't mean that you have worked out the high increase. All the bank has done is that it has rebased its inflation base, so that when they say it's 4%, it is 4% over last year's 30% or last period's 30%. So the celebration is misplaced in a sense that the consumers are under pressure and businesses are under pressure, and high interest rates themselves are known not to impact on the causes of South Africa's inflation.
And of course, you are saying there are many people celebrating that repo rate remaining unchanged, and you're right, because consumers really are cash strapped. And you know, when you look at the announcement there by the Reserve Bank governor, he also then remained quite hawkish at the same time because of the global trends we continue to see, but at the same time also they're being wary around the concerns being raised on inflation in the country.
I think as a country, we almost need a relook at how we measure the performance of the Reserve Bank and how we measure the system. And the system here, it's that you've got a monetary policy, you've got fiscal policy, and you've got the parliament, right? And all of those institutions have a responsibility to improve the lives of South Africans, right? And we need to ask ourselves and say, in everything that the Reserve Bank is doing, are the lives of South Africans being improved or not? Because I mean, we're having a situation here where if you take an ordinary person that has a bond, who's experiencing high food inflation, whose bond has increased by 40%, you cannot really give them the false comfort of inflation being under control, when in real terms their expenses have really gone over the window, and they are being settled with additional extended family members who are losing jobs, and young people who are not finding jobs, because our cost of capital in South Africa is prohibitively too high and is becoming prohibitively high. And when you have that kind of scenario, the consumers are being pressed harder and harder, and we are not winners. They might say inflation is down now within the range, but it doesn't mean that the prices are actually within range. Life is becoming extremely expensive for the average South African.
And one would ask, like you're saying, that life is extremely difficult for many South Africans. What can we expect going forward now that we've seen on 2 consecutive times where it has remained unchanged? Can we expect the same trends throughout the year?
I think it is important for Reserve Bank to review its approach. Right now, if you have inflation driven by high oil prices and driven by high energy prices, how does raising interest rates or keeping interest rates high help with that inflation? Because this is what in their textbook they call an inelastic inflation, in that it doesn't respond to high inflation. So we have a lot of problems as a country, because if we don't address the question of employment and economic growth, I mean, the economic growth of 1% is too paltry. It doesn't change anything in this country. Unemployment will remain the same, if not increase. We need the country growing at 6 or 7%, and the Reserve Bank is a critical institution in this country that should actually be taking economic growth and employment creation as it's a primary mandate alongside inflation. I mean, their mandate is a balanced. It's a managing protecting the currency in the interest of balanced economic growth. We need to see that balanced economic growth coming through, and 1% is nowhere near balanced economic growth. It's actually a regression from an economic point of view.
And Mr. Msibi, of course, I can hear you quite disappointed there when it comes to, the inflation in this country and the state of the economy. When it comes to, South Africans and what this essentially means for South Africans, because a number of them, as much as you are saying and you're, giving us the problems we're currently facing as a country, but some of those are actually quite relieved that, despite it being unchanged, there is relief in terms of that there was not an increase. What does this actually mean for South Africans?
Well, I mean, if I don't beat you more, it doesn't mean that it's a relief. Right? I mean, the Commissioner Fundi Chazbane mentioned that the loans are underperforming to the extent of a 28% default. Right now, they are not doing anything to fix a 28% default. It's almost like a prayer to say, we'll keep things as they are, and hopefully the 28% default will go away by itself. It doesn't, right? Unless if you take actions and ensure that you can have a structured intervention and work on the outcomes. And the outcome cannot just be inflation. There's a number of measures that must be taken into account with inflation in order to establish if ever the monetary interventions are yielding the right results. At the moment, they are not. They are not because the cost of living is too high. People are losing houses. People are losing cars. And businesses are not affording the loans, and therefore they themselves also defaulting. Because whilst she says banks that are lending more to consumers are seeing a 28% increase in defaults, she's not necessarily saying that banks that have a mixed loan book, the consumers and business are in a better position. They're also suffering, and this suffering means that they need to run the Reserve Bank and the economy in a balanced way. I think at the moment they are just looking at one area and one area only.
And Khandani, when can South Africans actually expect some sort of decrease in the repo rate? We've seen it just go up over the past a few months and years. When can they expect a relief when it comes to finally seeing this trend dropping?
There's 5 people that sit in the NPC who unelected, but they vote amongst themselves to decide whether they bring down or they maintain or they reduce the or they increase the interest rate, right? And I think they are reading an old model of economics, a model that doesn't talk to today's integrated world. Where some exogenous factors can actually wreak havoc in the South African economy to the extent that inflation increases. Right? So we did a relook because the manner in which they are running this thing, they're looking at a very limited set of numbers, and also they have insulated themselves from the conversation about jobs and employment, and that's why that doesn't come into the discussion. Then we're sitting with young people graduating, leaving school, but the prospect of them getting employment is very low. And we as a country, we don't see that as an emergency, that we are in a crisis as a country, and we needed to have an emergency act, including how the Reserve Bank can change itself in order to impact a broader set of problems in the country that are of economic nature than just than just one measure.
Mr. Msibi, thank you so much for your time, and thank you so much for your contribution. Surely there are harsh words coming out from our commentator for tonight, and of course saying that we need to relook the MPC and at the same time also the Reserve Bank itself. That is Mr. Khandani Msibi. He is the CEO of 360 Global Solutions Group. Let's take a quick ad break.